Our main speaker also absolutely fits my Seattle Forward showcase theme. Kerry Killinger, CEO of Washington Mutual. He's led WAMU from a quirky regional thrift to one of the nation's largest financial services retailer. A Fortune 100 company employing over 40,000 people, serving consumers and small to medium businesses. Joining it in 1982, Kerry's been president for 20 years, time in which to be both a banker and CEO of the year. Kerry serves on boards of 2 Seattle-based roundtables and its Chamber of Commerce. Fortunately, he's got a passion for education. I was just talking to him, and he said his dad was an instrumental band director in a school in Des Moines, I believe it was. Anyhow, he's got that background. He grew up with it. I asked him, did he play? And I'd forgotten. He plays the trumpet. Well, Kerry and his wife, Linda, co-chair a successful, above-goal, $35 million capital campaign for the UW's Department of Education. Kerry's got some perspectives to tell us about WAMU's future and the challenges of the national housing downturn. There may be time for questions, so be thinking. Please now, join me in a warm welcome for fellow member Kerry Killinger.
Well, thank you very much, John, and good afternoon, everyone. And certainly thanks for allowing me to have a chance to say a few words this afternoon. And it's great to be able to be back at Rotary and actually have an attendance today. That was good. And to see so many friends, and we have a few past and current WAMUlians here, and my wife Linda are in the audience as well. So it's certainly thanks to everybody for being here. You know, I was looking back on my speech notes, and I think this is the 9th or 10th time that I've had a chance to speak to the Seattle Rotary over the years, because I've been involved for a long time. And in the past, I've had a chance to talk about the growth plans that we were going to do at WAMU. And I remember having one of those speeches talking about we think there's an opportunity to expand to the other side of the state, and as a part of that expansion speech. We've had a number of times I've had a chance to talk about K through 12 and higher education and the importance of that. And sometimes we have to talk about the ups and downs of the business cycles. And I'm going to talk certainly about that a bit today. You know, we are at a critical point, certainly in the case of Washington Mutual. And I think it's a very critical time, and it's very important to kind of lay out everything for you about how we see the future and what we're doing to create a very positive future for ourselves moving forward. And I think it's particularly appropriate to be able to talk to Rotary because, again, I view WAMU and Seattle as quite intertwined. I think we've been very good for each other in the communities. And I don't think there is a group in the Seattle area that does a better job of reflecting the great partnerships that need to go on between the business community and the governments and other constituencies than Rotarians. So I'm so pleased to be able to be here today to share a few thoughts. I have to be honest with you. I'm having kind of a strange experience these days, and it kind of. It's repeatedly kind of happens, and I suppose it has to do with the stock price, our stock price being down, and the company reporting losses due to this severe housing crisis. And I'm going to talk about that in a minute. but I kind of consistently have friends and colleagues and even family members kind of come up to me and say, "Kerry, how are you?" And you know, and I usually try to respond to saying, "I'm just fine, yeah, but you know," and then they'll come back and they'll look at me and they'll go, "You know, you look better than I thought you would." And I go, "Okay." And you know, you thought about it. You know, I couldn't help but laugh a little bit, but certainly what we're seeing is that probably most people get their perspectives from reading the newspapers or watching the news or on television, and probably tend to get sound bites and limited stories, and sometimes fail to capture the totality, I think, of what we have going on at WAMU and how it fits into the context. So, so to tell you the truth, of course this is a tough time, and I'll talk about that in a minute, but this is also a time of true excitement and being energized by all the initiatives and all the different things that we have going on. And I think it's not only what we need to do to get through this period, but to get this company positioned for growth that I know is going to come on the heels of an improved environment. There's no question that 2008 is a period in which really tough for our company and the entire financial services industry. And, you know, and this is frankly about as challenging as it gets for any of us that are especially involved in home lending, because we simply have not had this difficult a period since the Great Depression. But, you know, quite some time ago, I had to go to our employees, and we talked about this. We said, guys, we can complain and just kind of roll over, or we're going to make an important decision. And that decision, they have responded to very favorably. And what that's all about is that we said we have to take a conscious, deliberate choice to take this company, fight to the last, and do everything that we absolutely have to do to take this company through the downturn, positioned for the turnaround for the benefit of our shareholders. And I think by being able to get everyone focused on making that happen, it has actually turned into a pretty inspiring journey for us. Now, I'm not trying to imply that the past year hasn't been, hasn't been easy. We've been working 24/7. It's been stressful, sometimes exhausting, and we've had to make a lot of really, really tough decisions. But I think every step of the way we've stayed very focused on the basic long-term vision that we've had for WAMU, and that is to be one of the nation's leading banks for everyday consumers and small businesses. And I think in looking back over the last few months, we have made a tremendous amount of progress, and I'll touch on that just a bit. Now, I think that as we touch about some of that progress, though, it also needs to be in the picture of what's going on nationally in the housing markets, and what is it going to take for this country to move from a downward spiral that it's currently in to a period of recovery, and then get it prepared for an upturn. And as I said, in housing, we are having the greatest downturn since the Great Depression at this point. Now, one of the most important things that we had to decide in managing our company was to focus all of our attentions and resources on executing a very aggressive strategic plan that we put together to bring the company back. And very simply, there are 4 key priorities that we had for ourselves. I think the first, which is natural in banking, is to be sure that we maintain ample capital and liquidity. Those are lifebloods for financial institutions. The second is we have to tightly manage all of our credit, our portfolios, all of our loan portfolios, and manage them very tightly through this period of stress, and being sure that we're not adding any new problems to our portfolios. The third is that we have to continue to grow, though, our most important cornerstone business, which for us is retail banking, because I want to be sure that we continue to invest in that business even while we're taking care of some of the other challenges. And then fourth, we really have to go after expenses. Anytime a company is under stress, you've got to do everything you can to become highly efficient and be sure that every penny that's spent is absolutely necessary. Well, as I said, the good news, we are making some progress on each one of these fronts. Let me just tick them off. First, on capital. we've been successful in raising $10 billion in new capital in the last 6 months. And that should be sufficient to position the company to not only weather the housing downturn, but to support our growth when those market conditions start to improve. And I think it's important to note that some of the largest and most sophisticated investors in the country were part of our efforts to raise capital, and we take their confidence in WAMU as a very positive sign. Now, they did extensive due diligence on our company, and they concluded that our stock was very attractive investment opportunity at these kinds of levels. Second, on liquidity. Our liquidity position, fortunately, is very strong. You know, we have about $150 billion of core deposits, and in the first quarter, our retail deposits grew by another $8 billion. And we also have very favorable borrowing access to what's called the Federal Home Loan Bank system, and we currently have about $50 billion of excess liquidity there. So we believe we have great sources of liquidity. Now, on our second priority, which was credit management front, we continue to keep a very close eye on all of our portfolios and limiting the credit quality in all of our new loan production. We significantly reduced the small amount of subprime lending that we used to do, and we cut that back dramatically the last 2 or 3 years, and we finally just continued that whole business, that whole subprime mortgage channel last year. We've also been tightening underwriting standards in virtually all of our product areas, and now originate mortgages or home loans only through WAMU employees, and we no longer originate through mortgage brokers. Now, for our problem loans that are already on the books, we're doing a great deal to modify terms, do whatever we can to keep people in their homes. Now, some delinquent loans inevitably end up in foreclosure because there just aren't any viable options for the borrower or for the bank. But our strong preference is to keep people in their homes and to help them work them through wherever that is possible. Now, perhaps most important of our priorities is this third priority, which is growing our retail franchise. And I'm happy to report that that's going very well. Last year, we actually added more than 1 million net new growth in our customer accounts. That, again, we've been able to grow by more than 1 million per year for the last several years, and we continued that. And in the first quarter of this year, we set a record for the amount of cross sales, in other words, how many products and services we sell to each customer on average. For those of you involved in small business, our small business deposit accounts are up 21% in the past 12 months. And for those of you on the internet, we are now the #1 opener. We have the largest market share of checking accounts being opened online of anyone in the country of where we do business. So the retail channel is the crown jewel of WAMU and is the cornerstone of our comeback and is our largest and consistently most profitable business that we have, and I think at this point is doing very well. Now, the last of those 4 priorities then was expense management. Now here we've already made some very tough choices and we've had to do our share of cutting, including significantly reducing our home loans operations to meet a market demand that has declined pretty dramatically. And we announced in April that along with redoing in the home loans area that we'd also continue to resize our back office operations to try to get that in sync as well. Now we simply have to maximize every dollar that we spend and prioritize activities on the highest return on investment things we can do. That's why we're continuing to invest in our retail bank, opening new stores and growing in that area, while at the same time that we're trying to cut back and get very cost conscious in everything else that we do. We've always managed expenses at WAMU, I think, pretty carefully, and we are big believers in what we call operational excellence, which is our version. You may have heard the fancy words of Six Sigma and continuous quality improvement. But the reality is that when a company like ours goes through 15 years of pretty rapid growth, it is always good to step back and review all of the operations of the company. And that's what we're currently in the process of doing. So we've looked at everything from a very critical standpoint. We put everything on the table to be sure that that everything that we're doing really is going to delivering outstanding service to our customers, allowing our controls to be good and positioning us for the future. So I think we'll continue to invest in our core retail. At the same time, we will slow down or stop activities that just don't make sense for the company. Now, ultimately, our strategic plan is designed, as I said, not just to get us through the market crisis, but to position us to achieve our company's vision over the long term. Now, another important choice that we had to make, and I want to hone in on this for just a moment, is that whenever you go through a stress period, you have to get that gut check about how are you going to operate, and are you going to go for the quick turnaround and maybe the quick buck, or are you going to stay focused on the core values and the principles that got you to where you are? And that was something that our company did a lot of thinking about, and fortunately came to the conclusion that we would keep our core values and corporate culture at the center of everything that we're going to do. They're going to guide all of our actions. We think it's what sets us apart from our major competitors, and is why customers ultimately want to come do business with us. Now, we've established kind of 5 core values of the company, and I'll just briefly comment on them. They're fair, caring, human, dynamic, and driven. And for us, fairness simply means that we're committed to acting with absolute honesty and integrity in everything we do. On caring, it means that we're going to treat each other and our customers with the utmost respect. And it also means that we give back to our communities through grants, sponsorships, employee volunteerism, and like the unique partnerships we did with the Seattle Art Museum, where we're able to build a facility that will give them expansion space for decades to come. I think human for us means that when we make mistakes, as we inevitably will, that we fix those problems, and that we do all we can to learn from those mistakes, and we check our egos at the door and try to maintain a sense of humor, a little quirkiness for us along the way. And dynamic for us means that we're constantly innovating, breaking down silos, looking for better ways to serve our customers. And then finally, driven means that we're committed to excellence, willing to work harder than anyone else around and deliver value to our shareholders and great service for our customers. So I'm very proud of the culture that we have at WAMU and the way everyone on our team is working and living those values. And I think that those values have been critical to helping us retain employees, helping with morale, helping their productivity, and ultimately helping us successfully execute our plans. Now, I'd like to also make a comment around some progress that we've made with our customers, particularly those home loan customers that are having some troubles in these times. In April of last year, we pledged $2 billion to help borrowers facing the threat of foreclosures, to try to help them come up with alternatives. And so far, we've been able to help about 35,000 people with repayment plans, loan modifications, and other forms of assistance. So we're doing all we can to help our borrowers and to help turn things around. And there's certainly a lot more that we need to do. But let's talk a bit about this whole housing crisis and what I think we need to do to start getting it turned around. I think we all knew that housing prices were rising at an unsustainable rate, and we did have some speculation that started to go in different parts of the country. And I think we all knew that the market would have to correct itself at some point. But what we thought was likely to be a gradual slowdown in the housing market, beginning about this time last year and extending right in through the end of May, it has led from a normal gradual slowdown to what I would call a dramatic free fall. And, you know, a year ago, I was personally talking to the chairman of the Federal Reserve and looking at all the forecasts coming out of the Federal Reserve. Their forecast is that we would have a modest housing slowdown that would not have any significant impact on the economy. Obviously, that forecast was way off base, and certainly most thinking from a year ago for most economists turned out to be way off base. So what has really happened? In areas like California, Arizona, Nevada, Florida, which happens to be areas where we do an awful lot of business, home prices in some of those communities have fallen by as much as 35%. And as of May, over 75% of the homes in the United States have lost value over the past 12 months. Now, fortunately, the situation in Seattle isn't nearly that dire. From peak conditions to current conditions, depending on the measure you use, Seattle has been basically flat to down about 5 or 6% in prices. Probably one of the top performing markets in the country. I believe that part of that has to do, obviously that's the home of Rotary 4, so it had something to do with it. But beyond that, I think it certainly has to deal with the extraordinary quality of life that we enjoy in Seattle, and I think that's helped protect the market a bit. But we are going to start feeling the impact of the national housing downturn here, and I think this will continue for a few months now. Now, the housing downturn has led to record loan losses, record foreclosures, and hundreds of billions of dollars of losses on securities that are backed by homes. Now, this in turn has caused large losses at nearly every major bank and securities firm in the United States and abroad. And these losses have required most banks and security firms to raise billions of dollars of new capital. Now, the downturn in housing has also led to reduced consumer confidence, lower consumer spending, rising unemployment, and an economy bordering on a recession. And the human toll from the housing crisis has been great on those who lost their homes, those who may have lost their jobs or saw the equity in their homes decline and in many cases vanish. Now, what has been particularly challenging for a bank like WAMU is that the high lending standards that we've maintained for decades still resulted in unexpectedly high loan losses. Now, the overwhelming, by far overwhelming majority of our loans were underwritten to loan-to-value ratios of 80% or less and to prime borrowers. But when housing prices decline by up to 35%, even conservatively underwritten loans can perform poorly. Now there's multiple complex causes for the downturn in housing. And we've heard plenty of blame directed at everyone involved for creating the bubble that then burst so dramatically. Some would say the Federal Reserve. Remember, they brought interest rates down to 1%, and that helped fuel things. Some would say that housing speculators really got into the game and just caused things going up. I knew we had a problem when my wife's hairdresser was talking, or I think his hairdresser was talking about her third condo in Florida or something. And we all had those kinds of stories, right, where people were just getting carried away on speculation. There's no question that there was a loosening of underwriting standards in some parts. There's no question that there were some irresponsible brokers out marketing products to people that may not have been appropriate. How about the government? The government had a housing policy that says we want the percentage of the people owning homes to go up. So sure enough, it went up from 65 to 69%, and that sounds great, except we unfortunately put houses into some people's homes who couldn't afford to pay for them. And there was also an element of irrational money flooding housing from Wall Street. Wall Street had so much money from both domestic and international sources, man, they were just absolutely flooding the market. So I would say it's probably a combination of all these factors. And the point I would make is that it's really time to stop trying to fix the blame and start trying to fix the problem. Now, after all, housing is the key to the financial well-being of many Americans, since it is most often people's largest financial asset. It's also the basis of financial health for local and state governments who rely on real estate taxes for schools and other important services. We're all going to be very hard-pressed at the state and local levels to try to make the tax rolls work if housing prices continue to come down. And third, housing helps drive local economic development. It's a key part of the local engines. Now, we have to focus on the future, I believe, and on stabilizing the housing market. I think it's time to renew the consumer confidence, which has kind of moved away right now, and to increase the flow of capital, which has kind of gone away, back into the housing market. And to that end, we are very active as WAMU in helping shape public policy efforts and trying to stabilize the markets, as well as to help troubled borrowers. In helping borrowers, we were one of the key participants in the Hope Now Alliance, where lenders, servicers, investors, counselors, and other mortgage participants have all come together to try to help folks out. As of April, we have now helped out 1.5 million borrowers through loan workouts, loan modification, repayment plans to try to keep those folks in their homes. Now, at the state level, last fall, WAMU participated with the Governor's Task Force on Homeowner Security. Now, Governor Gregoire brought together government, the lending community, and consumer groups to evaluate the market instability that was taking place in housing and to make some recommendations for new or stronger consumer protections. And working together, we recommended legislation to prohibit certain lending practices and require clear, concise disclosure of loan terms. And we also recommended making mortgage fraud a felony. Well, pleased to tell you that the resulting bill did pass this session. Now, finally, there's important legislation working its way through Congress right now, and we're working hard with lawmakers to get a strong bill passed, and would like to see it done by the July 4th recess. Now, companion bills in the House and Senate would include housing tax incentives, more funding for for home counseling for people, a tax credit of up to $7,500 for first-time home buyers. And the bill would also create a $300 billion assistance package, allowing perhaps as many as 1 million homeowners whose home values have declined below the amount of their loans to help refinance those homes through the FHA. Now, those bills would also reform and modernize the FHA programs and make significant changes for what we call government-sponsored enterprises like Fannie Mae and Freddie Mac. Now, the President had threatened to veto these bills, but more recently we've seen some indications that we may be able to reach a compromise that the administration can live with. So while the housing market continues to be under pressure, there are some hopeful signs that we may be beginning the long journey to stabilization and eventual recovery. Now, I'm also very hopeful about the important progress that not only we're seeing in housing, but what we're doing then at WAMU. And I think in the end, I think these times, that this is going to be an opportunity to write another great chapter in the long success story for our company. After all, if you go back in our history, we're no strangers to crisis and challenge. We were founded in the late 1800s with the principal purpose to help rebuild a burnt-down Seattle after the Great Seattle Fire. We fought our way through the Great Depression and led the industry in helping keep customers in their homes. We've created some of the most innovative products for our industry, with our first amortizing home loan, to our free checking, to our award-winning Ocasio branch design, to industry-leading online services. And was mentioned in the introduction, from my perspective, when I had a chance to join the company back in the early 80s, we had assets of less than $3 billion and less than 3,000 employees and a retail presence in half of one state, and that was here in Washington. I think today we have more than $300 billion in assets, more than 40,000 employees, and a retail footprint in 15 states, and we're the nation's 6th largest bank, serving about 20 million customers now. So I think that's more of the holistic story of WAMU, not just the crisis of the last year, but also the successes of the last 119 years. Now, yes, we are certainly going through a challenging period, which has caused our stock price to decline, and our company is not earning a satisfactory return. But having worked through many cycles, I have the advantage of knowing that cycles change and that the impact of an improving cycle can be dramatic on our financial results and the stock price. So as I said, I've had an opportunity to be with the company about 26 years, about 20 as president, 19 now as CEO, and I just love this company. But I'm very proud of WAMU's powerful resilience. While we understand and we're dealing with today's challenges, we won't stop pursuing our vision for the future. And my commitment to that vision is as strong as ever. It's never wavered, because I believe, as so many of our employees and our investors and our supporters here in Seattle do, that this company is unique, important to the community and the other constituencies. For us, being the best has never been about being the biggest, flashiest, or bank for just the wealthiest or the most profitable customers. We've always been about providing great service and innovative products for everyday people and small businesses. That's our vision, and we're even more committed to that today than ever, and I'm highly confident that we will reach that vision. Well, once again, thank you very much for taking the time to be here today and for what all Rotary does for this community. And it's been an honor for me, and if there's a chance for a question or two, and if you have the time, I'm happy to do it. Okay?
Thank you, Kerry. Thanks for sharing Rotary friendship and service with me. We're adjourned.
Seattle Rotary Online is made possible in part by a grant from First Choice Health, working with the Washington Health Information Collaborative to use technology to bring better health care to patients throughout the Pacific Northwest. First Choice Health.